If you're running a firearms business, you know the challenges. You provide a legal, constitutionally protected product to law-abiding citizens, yet when it comes to getting paid, you're often treated like a second-class merchant. You've likely dealt with it, the high-risk merchant accounts. That means higher processing fees that eat into your margins. The constant threat of your account being frozen or shut down by a payment processor with a political agenda, and jumping through endless hoops just to accept a simple credit card. What if there was a better way? A way to take back control of your transactions, lower your fees, and even protect your earnings from inflation. Today, we're talking about that way. We're talking about cryptocurrency. So let's talk briefly about what cryptocurrency is. Cryptocurrency is part of a decentralized banking network, which means there are no overseeing banks like Bank of America, JP Morgan Chase, Citibank. Nobody directly controls cryptocurrency or any of its transactions. This means in terms of the firearms industry, Visa and Mastercard can't up and decide one day to prohibit your transaction. Cryptocurrency being a decentralized bank platform means that it is overseen from person to person or peer-to-peer network. Only the people doing transactions can oversee a transaction. And that way it is decentralized. When we talk about cryptocurrency, that covers a wide range of assets or currencies. We're going to talk about three specifically: Bitcoin, Ethereum, and USD token, or USDT. Those are what I would recommend if you're setting up your business to accept cryptocurrency, because those are what are referred to as stablecoins. Those are quite predictable. If you hold them for a longer amount of time, you can generally predict what price they're going to be at in comparison to the US dollar, which fluctuates at all given times. Another topic we're going to talk about is cryptocurrency is kind of a inverse of the situation with US dollar in regards to inflation, where Bitcoin usually goes up over time, especially due to a concept we're going to talk about called halving, where the coin halves every certain amount of time. It generally goes up over time. There are less Bitcoin in circulation, and so each one becomes more valuable. In comparison to the US dollar, the government can just print more money at any time. And so that inflates the amount of dollar in circulation. So even if you hold Bitcoin over time, or really any cryptocurrency that is shrinking, your token or coin will be more expensive over time. It generally goes up in value because there are less of them. So here we're going to talk about Bitcoin, Ethereum, and USD, or Tether as it's also referred to. So Bitcoin, think of Bitcoin as digital gold. It's the original and most secure cryptocurrency. What makes it so powerful for a business owner? Two things. Scarcity: there will only ever be 21 million Bitcoin, unlike the US dollar, which can be printed endlessly. This is really important. Bitcoin's supply is fixed. Every 4 years, an event called the halving occurs, which cuts the creation of new Bitcoin in half. This increasing scarcity has historically led to an increase in its value over time. An inflation hedge. While the US dollar is constantly losing purchasing power due to inflation, Bitcoin has acted as a store of value. The money you earn today could be worth significantly more tomorrow, protecting your wealth instead of letting it erode. So Bitcoin is kind of the original cryptocurrency. It was the one that got cryptocurrency on the map. In terms of cryptocurrency, Bitcoin, it's kind of the aging token. It's a little bit more expensive to use in comparison to especially Ethereum or USD/Tether. It can be expensive to move just because of how expensive one coin is. When you do a transaction, you have to pay what they call a gas fee or a transaction fee. This is to move it from one wallet to another wallet. So if you're talking sending one Bitcoin to another person, you have to pay a fee for the network to verify or move your money from one wallet to another. You're paying another person to verify that transaction. And this is why the system works as far as decentralization is everybody has to agree on this. And so if you ever heard the term mining Bitcoin, what that essentially means is machines are verifying large amounts of transaction data from one wallet to another. All of these have to be verified over and over, and everybody has to agree. So every miner has to agree that every transaction is legitimate and has actually occurred. And so that kind of processing power has value. Each time a transaction occurs, the network has to verify every previous transaction before. And so it becomes harder and harder to verify the whole chain of transactions, and it requires more and more processing power, which makes Bitcoin creation, which is a reward for verifying transactions, that's where your fee goes, harder and harder. And so it drives up the value because more money has to be spent to create a Bitcoin. And like they say here, scarcity, there will only ever be 21 million Bitcoin in circulation, ever. So moving on, Ethereum is the second coin we're going to talk about. If Bitcoin is digital gold, think of Ethereum as digital oil. It's like the fuel for a new kind of internet. While you can use it for payments just like Bitcoin, its real power is in smart contracts and applications. For our purposes today, just know it's another major reliable coin that customers may want to use. So Ethereum, I think, is going to be a very large thing in the future. Already, it is a payment token for a lot of different, and this is something we're not going to touch on, but layer 3 contracts, digital platforms, all of this runs in Ethereum. In comparison to Bitcoin, Ethereum is a lot lighter, cheaper, and easier to use. It's easier to move money back and forth, but it's just as important in the whole grand scheme of cryptocurrency. You could compare it like saying it was silver, or in this case, our script here says oil. It's a fuel for a new kind of internet, and so that it has a very important part in the ecosystem of cryptocurrency. And it's one that you should probably accept for your business as well, because it's so popular. The next one we're going to talk about is USDT or Tether. Think of USDT as a digital dollar. It's what's known as a stablecoin, which means its value is pegged 1-to-1 with the US dollar. 1 USDT is always worth $1. This is your tool to eliminate price volatility. If you're not comfortable holding a fluctuating asset like Bitcoin, you can immediately convert your payment to USDT and hold stable digital cash. So USDT, if, like they say here, if you're worried about the price going up and down, because all of these assets trade just like stocks, and a little bit further than that, they trade 24 hours a day. So they have a value that fluctuates up and down based on what the market says the value is worth. It's a speculative asset. But in comparison with that, USDT or Tether is a 1-to-1 with the US dollar, so it's always worth $1. But yet it's still a cryptocurrency, so it can be treated as a decentralized token. There's no bank overseeing it. And that's going to take us to where we get to next. How do you turn these into US dollar? So let's say you accept it for a transaction, you have the digital asset or cryptocurrency, and then you want to sell it back into dollar. So to liquidate a cryptocurrency such as Bitcoin, Ethereum, or USDT, or actually any recognized cryptocurrency by exchanges, in this case we're going to talk about two exchanges, Coinbase and Binance, which is the two that we accept at C. Stevens Gunworks. Coinbase is what I'm going to base this analysis on right now. It's a similar process for Binance. This right here, this is a picture of what they require to open an account at Coinbase. As far as I know, this is the same at Binance because these are federal requirements. These are U.S. federal and state laws to open a cryptocurrency exchange account. And they do this because they want to combat money laundering and tax fraud. So these are the kind of documents you need to open up a brokerage account with Coinbase, but also for Binance. So we'll go through it real quick. For a standard individual account, this is the baseline account everybody creates at first. A small sole proprietor might operate out of this, though a business account is recommended for liability and accounting purposes. You will need personal information, full legal name, date of birth, physical address, social security number, a government-issued photo ID, and they'll have you upload this through the app. I don't know if they have a desktop application. I know they have a website, but typically when you make an account, it's through like an iPhone or an Android app. You just take a picture with your phone camera of your driver's license. And then they ask for a liveness check / photo verification to make sure you're not a robot. You have to be an actual person. And again, this is kind of a federal regulation. They don't want bots moving money back and forth. And this is more for like tax purposes to make sure you are who you say you are. And then they go on to say for a Coinbase commerce or business account, this is the proper account for a registered business, LLC, S Corp, etc., to accept payments. The verification is more extensive. You will need all the individual information for the person opening the account, the control person, plus the following business documents. Business information, legal business name, doing business as, name if applicable, and from the IRS, business phone number and physical address. Legal business documents, you'll need PDF copies of formation documents, governing documents, and your beneficial ownership information. It says, due to strict regulations, you must provide the personal information, name, date of birth, address, social security number, for every individual who owns 25% or more of the company. You may also need to identify a control person like a CEO or managing member, regardless of ownership percentage. They may also need to verify their identity with a photo ID. And then proof of business bank account, a recent bank statement to link for withdrawals. And like I said, this is all IRS tax, money laundering, tax evasion kind of stuff. But if you have all these documents, and I would kind of, if you're just getting into it, open a standard account. If you start doing volume and it starts getting more and more complicated, especially for accounting purposes, that's when I would look into a business account. But if you're just doing like, I don't know, we've maybe done 4 or 5 transactions in total in the history of us accepting cryptocurrency. Just an individual account is fine, and then just make a note of where that money came from for your year-end accounting. Let's take it a step further and see what kind of pricing or trading activity these assets have. So here we can see what the value of Bitcoin, Ethereum, and USDT was on any given day. Bitcoin, we can see here, had a low of about $104,000 today and a high of about $105.25. Ethereum low today was $24.80, high was $25.40. And then USDT really kind of fluctuates right around $1. It might go as high as like 1/1000th of a dollar or 1/10 of a cent difference on any given day. It's really inconsequential. USDT is $1. There's been few events where USDT ever came unpegged from the US dollar, and that made national headlines when that happened. So it's very rare. But generally, what does this mean for us? So like if you accept Bitcoin or Ethereum for a transaction, you generally want to sell it pretty immediately, or you can hold it for a couple days and see where it goes. When you're on a brokerage like Coinbase or Binance, you still have to pay them a fee to sell your coin back into USD. Usually it's less than 1%. I think it's like 0.89 for Bitcoin or Ethereum. But if you catch it when it's down, like right now when I took these pictures, it's down a little bit. So if you hold for, I don't know, a couple hours, place a limit sell order, a lot of the time you can get that transaction for free when it rises back up a little bit. But of course that's speculation. That can happen, that cannot happen. It really depends on where the market is right then. But if you play it correctly, you can get your transaction fee covered just by selling at the cost of the transaction plus your transaction fee. So in that case, in comparison to a credit card transaction, you can sometimes have fee-less transactions if you do it correctly. And on a $1,000 plus order, that kind of adds up. If you're paying between 1 and 3% on a credit card transaction, that's between $10 and $30. That's just vaporized to Mastercard and Visa. Who doesn't want you to be accepting gun transactions at all? So this really gives the power back to you as a store owner. So let's walk through a real-life example of how a transaction like this would occur. So here is an example of a real-life application of paying with cryptocurrency. In this case, we're going to say Ethereum because Ethereum is a lot cheaper to use than Bitcoin when transferring. We're going to treat this as if you're sending the Ethereum between wallets directly. Now, when you do Coinbase to Coinbase, a lot of the time they don't do it through the coin network itself. If you do that way, you don't have to pay any fees for transfer. The only fee you pay would be selling it to the exchange in exchange for US dollar. But in this case, let's say you have Ethereum on your own wallet, you're sending it to a store, and you're wanting to pay for this, for example, USA Valor 200 round 9mm NATO. So the base unit cost is $164.99. You add the sales tax, which you're required to collect because you'll have to account for that later. That brings your total up to $179.43. Let's say you're at a checkout counter and they say, oh, well, I see you accept cryptocurrency. Would you take Ethereum? So then you pull up your account at Coinbase and you pull up Ethereum, and then when you click on it, there's a thing that says transfer, and once you click on that, it says receive from another wallet address, and then this screen pops up there on the left. You can scan that QR code and it will bring it up in Coinbase to start the amount transfer, or you can type in the address directly. If you click on the address right there, you can send it to that address. You just need to be very careful you type that address exactly correct, because if you send it to the wrong address, it's gone forever. There's no getting it back. But QR code is the best way. That way they just hold up their phone to your QR code and you're done. Like on our website, if somebody wanted to pay with cryptocurrency for any kind of item, I would just say, okay, well, what coin do you want to use? I will send you the QR code to your email or text. And then they scan that, they send it, then I start shipping the item out. It's that simple. Once I have the Ethereum, I can either hold it or sell it. And a neat feature I found, when you have the Coinbase Commerce account, you can tell it when you receive any kind of token or cryptocurrency to just liquidate it immediately. So you don't even have to deal with it fluctuating. It just, the second you receive it, it converts it to USD instantly. So that really simplifies it down. You don't have to even mess with that at all. At that point, it's purely just peer-to-peer cash with no credit card processor involved. I mean, it makes it really easy. So let's wrap this up and connect all the puzzle pieces. So here is a summary of everything we've covered. Step 1, get set up. Download the Coinbase app, create an account, complete the identity verification. This gets your business ready to accept the payment to begin with. Second step, calculate the grand total in dollars, including sales tax. Open Coinbase, tap receive, select the agreed upon crypto. Present the QR code to your customer for them to scan. Confirm that the transaction has actually shown up as completed in your app to make sure you've actually received the cryptocurrency. And then after that, you can either hold the crypto in your account as an investment or instantly convert the crypto to cash within the exchange. And then you can transfer it to your bank like normal. After that you've done that, you're set up, you're really ready to accept cryptocurrency for your business. At that point, you are no longer beholden to Visa or Mastercard and whoever dictates who can use their credit card at your store. So overall, this is everything I have for you today. I hope this has helped you understand a little bit more about cryptocurrency and what it can do for your business. I'll tell you, the inspiration for this video is I've been looking for a credit card processor, and I finally found one after probably 2 months of trying to get one on board. Cryptocurrency is kind of a low-stakes way to get instant electronic payments covered. It used to be for like gun broker, we would have to only accept money order, check, post office money order, any kind of prepaid check really. Or we did another service called Gun Tab, which is, they're like a escrow service, but of course they charge their fee as well. Cryptocurrency kind of gives you the power to do this yourself without anybody other than you and the customer involved. So it's really a new technology that I don't think a lot of people are aware of or have looked into, but it's a very powerful tool in this day and age. And it is increasingly more relevant when we see headlines like Mastercard and Visa are blocking or keeping records of firearms transactions because they politically don't agree with it. So cryptocurrency, overall, I think it's a great thing for your business, especially if you have a business in the firearms industry. This can really be used for any kind of business, not just the firearms industry. So I hope overall this video has educated you and helped you understand a little bit about the process. So if you've enjoyed, I'd welcome your thoughts. Let me know what you thought about this video. Leave me a comment down below. If you enjoyed the video, please leave a like and stick around with the subscribe button. We've got more exciting content coming up soon. Thank you.